Live from the Stone and Field Studios, it's Houston Real Estate Talk with your host, Kariliz Perez.
Hello, everyone, and thank you for joining us with the Houston Real Estate Talk by Stone and Fields. Here today, I'm with Patti Contrasto from Boxwood Mortgage. Welcome, Patti.
Thank you so much for having me today.
Absolutely, my pleasure. Can you tell me a little bit about yourself? Let's start with that.
Okay, thank you so much. So I started in the industry about 18 years ago. I started off as a loan processor and quickly became a loan originator. I worked for many different companies, including JP Morgan Chase for about 6 years. Wow. Went to several other companies, really good companies. And about a year ago, I was presented with the opportunity to become a mortgage broker. And what that indicated for myself and my career was an opportunity to expand the product selection that I'm able to offer my clients, and it really has been a great decision and a great step into this career.
That's excellent, Patti. Congratulations.
Thank you.
So Boxwood Mortgage. Tell me a little bit, how did everything started? A little bit of story about the name, and elaborate a little bit about the company.
Yeah, so I really like the name Boxwood because if you know a little bit about the plant, it's a plant that grows in a long period of time, but it stays fairly short. I love the meaning of that in terms of a company, right. Because by no means do we want to get too large and lose our client connection or grow in a way that we don't build a strong foundation. So okay. the wood of the boxwood plant is a very high quality type of wood that's used in musical instruments.
Oh, very nice.
So I was so connected to that because we, with every step and every communication, every smile, every recommendation that we give to clients, we always want to make sure that, our values are always present. And so that's where the name came from, the Boxwood Mortgage.
I love it. I love it. So Boxwood started last year, correct?
Yes, we started it at the end of the last year. Yes.
Very good. That's very nice. So why don't we talk about today about jumbo loans? How about that? The luxury market, jumbo loans. Let's elaborate on that. I have a few questions if we can get started with that. Let's start with the first one, which is, what is considered a jumbo loan? Tell us a little bit about that.
Yeah. So a jumbo loan is going to be a product that is not purchased or sold to Fannie Mae, Freddie Mac. Fannie Mae, Freddie Mac are government entities that purchase a majority of loan products like conventional loans. These loans are going to be in the state of Texas, and in most counties are going to be loans that go above $484,350. These loan amounts change from time to time, but as of right now, that is the loan limit for single-family residents. Okay. So anything above that loan amount is going to be in the category of a jumbo loan.
Very good. And it's really interesting that you said only for single-family homes. It doesn't apply for commercial or any duplex or multifamily or anything like that. Only single-family.
Correct.
Very good. What are the main requirements for a jumbo loan?
So the main requirements are going to be higher credit scores. Typically, you're going to want to have at least a 700 credit score above.
Okay.
Also, lower debt to income ratios. Okay. They're going to look at your percentage of debt and in connection to your income. Right. And oftentimes that percentage has to be lower than the traditional conventional loan. Okay. Also, reserves requirements. So a lot of people don't know what reserves are. Yes. Reserves are basically savings. Okay. So in the eyes of a lender, a reserve would be 1 month reserve would be an equivalent to your proposed mortgage payment, including taxes and insurance. So oftentimes lenders are going to require between 6 months to 36 months of reserves. Wow. Meaning 6 months or 36 months of that monthly payment on that new mortgage.
Interesting.
And this is in addition to down payment and closing costs.
That's a lot of money. Wow. I didn't know that. Very good. What are the common down payment requirements for jumbo loans? People mostly think it's only 20% or more. Tell me a little bit about that. Is it true? Is it a myth?
Yeah, there's definitely a lot of lenders require 20% down payment, and most products will require no less than 20% down payment. However, there are many lenders out there like us that offer 10% down payment jumbo loans. They will have certain restrictions, but there are lower down payment jumbos, and they're more and more common nowadays.
Very good. And tell me about this down payment has nothing to do with the reserve we just talked about, right? So that's totally separate. If you put 10, 20, or 30% or more down payment, it has nothing to do with the amount of reserves that the customer or the buyer has to have, right?
Correct.
Okay.
Yeah, the amount of reserves is on top of down payment requirements and any closing costs that the borrower has to bring to closing.
Gotcha. Very good. What you need to know about reserve requirements and jumbo loans?
So first of all, you need to understand if the product that you're applying for requires 6 months, 12 months, 36 months.
Okay.
In most cases, most lenders are going to require between 6 months to about 24 months. 36 months is a little extreme, but some lenders will require 36 months.
Okay.
Thankfully, because we are brokers, we have gone out there and looked for wholesale relationships that don't require that many months, because it is a challenging condition to meet.
Absolutely.
Not always will we have the borrower that has that amount of savings, especially investors that believe in placing their money in a certain investment, so they don't have a lot of liquid assets just laying around. We have loan products that don't even have any reserve requirements. So we have an average 6 months to 12 months, and then some products don't have any reserve requirements.
Very good. Does 401ks apply as a reserve, or that's still considered?
That's a really good question. Yes, they do to a certain percentage, because it is a non-liquid asset.
Got it. And there's penalties if they take it before time, or
there's penalties and liabilities, tax liabilities if you take it out before retirement age.
Okay, that's good to know. Is it true that jumbo loans can have higher interest rates?
They can. However, a lot of lenders out there, a lot of wholesalers that we work with, have monitored the performance of these loans, the demographic, the type of clientele that will obtain a jumbo loan. And they've seen that these loans perform so well that they've designed a portfolio product to cater to these clients. And so what happens is, when they want to attract more of these clients, they create this product, they make this product way more competitive. So in most cases, some jumbo products are going to have better rates than conforming loans.
Very good. And I'm sorry, this is not part of the questionnaire, but how are the rates right now in regards to jumbo loans? So people have an idea, a ballpark. I know it could change tomorrow, but as of today, what are those more or less rates on the jumbo?
So rates, it's a little bit of a complex question, right?
Yes,
but I can give you a range. It's okay. So it's going to depend on down payment. It's going to depend on credit score. It's going to depend on the size of the loan as well. But a tier A type of client right now on a jumbo product can and may be able to obtain rates in the threes, starting in the threes.
Wow, that's amazing. So definitely not necessarily higher rates like you just explained. Are closing costs higher on a jumbo loan versus a conventional conforming loan?
Yes, they can be, and it also depends on the loan size. So because there's a little bit more requirements in terms of the processing of such loan, oftentimes, again, depending on the loan size, we're required to order a second appraisal, which will indicate additional closing costs. So it can be, and it's good always to understand those requirements so that the buyer can prepare better.
Very good. Can a foreign national borrower get a jumbo loan?
Yes, foreign national borrowers can definitely get a jumbo loan. In fact, that's one of our primary, type of client that's seeking within that price point. So foreign nationals can come in different forms, right? Or they're different type of clients. It can be someone who lives in another country that wants to purchase a property here and maybe use it as a second home because maybe some of their family members already live here, or someone who's being relocated through their company and is being offered a sponsored kind of visa, and they're going to be living here. So these individuals, that's what they're called, foreign nationals. Oftentimes they will not have any credit or income history in the U.S., and they can definitely obtain a jumbo loan.
Very good. A foreign national has to give a bigger down payment, or that's not true at all?
Typically, it's a good question actually. The foreign national is most of the time are going to require to put at least 20% down payment. But in terms of the interest rate, considering, a jumbo product, it can be a little bit higher just because there is less documentation associated to their profile. But yes, 20% down payment is the standard for foreign nationals in the jumbo world.
Very good to know that. So what about these loans I keep hearing about and called high balance nationwide, which are above the county loan limits, yet yet they are not considered jumbo.
Okay, I'm particularly in love with this product because the state of Texas is not considered a high cost state, right? What that means is, Fannie Mae Freddie Mac decides that for a single family residence, the maximum loan limit is going to be $484,350, right? However, if you go to California, you go to Florida, those amounts for Fannie Mae Freddie Mac can go up to $600,000, $700,000, $800,000 and still be considered conforming, meaning not jumbo, right?
Yes.
So we as brokers work with wholesalers that have what they call a high balance nationwide. So while Texas is not a high balance state, this product covers any client that wants to do a product or a loan that goes over $484,350.
Okay.
And they allow us to go all the way to $679,000.
Amazing.
Okay. It's not a jumbo and it's not a conforming loan, right?
Right.
It's a hybrid. I call it my hybrid.
Yes.
So this one allows us to go up to $679,000,
Right.
place only 10% down payment,
Okay.
have lower credit scores such as 680, lower than the standard
regular,
jumbo.
right.
And these products have no mortgage insurance, and the rate is super competitive.
Wow, no mortgage insurance. That's amazing. Ideal, right?
Yeah.
What if the clients write offs lots of expenses on the tax returns? Can they still get a jumbo loan? Because obviously, as independent contractors or self-employed, most of the time we write off everything. Tell me a little bit about that.
Yeah,
right?
so we both can relate to that, right?
For sure.
So these jumbo products are investor, or they come in the form of they call them non-QM loans. So they're investor friendly loans that can go up to 3 million, 4 million, 5 million, right?
Yeah.
So these non-QM loans have limited documentation or allow alternative documentation in lieu of tax returns.
Okay.
So an investor that understands the benefits of writing off expenses as many as possible will want to seek a product like this. The alternative documentation that these products will allow are going to be in different forms. It could be 12-month bank statements. It could be 1-month bank statement in lieu of tax returns. It can be a CPA letter that will state how much income their company or them as an employee produce. It can also come in the form of asset depletion. So it's a product that allows the assets of that borrower to be divided typically within 36 months or 60 months, and that in turn turns into our income, our qualifying income. So that, yes, there is alternative documentation. They're called non-QM loans. The interest rate is a little bit higher, not too high. It's still very, very competitive. And the down payments are going to start in the 20%.
Okay. So it's case by case.
Yes.
Once the borrower applies, then the bank will return and say, these are the conditions. Let's look at either the tax return or the last 12 months of bank statements and so on.
And it really depends, sorry to interrupt, it really depends on the documentation that the borrower can provide.
Okay.
So if the borrower already knows up front that they don't have enough deposits coming into the bank account for the last 12 months or 24, then they may choose not to go the bank statement route. They may say, I'd rather go the CPA route because I know the income comes in. My CPA can certify that the income comes in, and I want that to be my income. There are also products, non-QM products that we have that are jumbo products that don't require tax returns, don't require any income, and they don't require assets either. They're basically these investors, these wholesalers are banking on the fact that they're making, the borrower is making a good decision on a property and placing enough down payment that it alleviates a lot of that risk that comes with those products.
There's plenty of equity up front. Very good. Any other advice that you can give buyers looking in the luxury market that are thinking about buying the next couple of months? What can you tell us?
Yes, of course. Because of the complexity of these products in comparison to conventional loans, we always require to be proactive about meeting your lender in person, making sure that you provide all the documentation necessary to get a solid approval. You don't want to have a pre-qualification letter. You want to have a pre-approval, which means your file is going to go all the way to underwriting. The underwriter is going to review all the documentation and issue a solid approval. we also recommend understanding the term times, because these jumbos can take a little bit longer to close in some cases.
Okay.
You want to make sure that you know that up front, because when you place that offer with the seller,
Right.
You want to make sure that everyone has the proper expectations in terms of how soon can we close on this loan.
Right. So do
Yeah.
you recommend a realtor working with a borrower looking in the luxury market to at least 45-day closing?
I would say so, yes. 35 to 40 days, probably
Okay.
pretty standard, yes.
Right. Okay, that's good
Yeah.
to know. Wonderful. Anything else you want to add, Patti, before we say goodbye to our crowd here that is watching?
Yeah. Well, I mean, I definitely, everyone's got a different scenario. And
Right.
it's very, very important that you work with a lender that interviews you
Sure.
and genuinely wants to know what's important to you, long-term, short-term. Why do you want to place your family in this home? Because at the end of the day, a loan is a tool. It's a tool for you to place your money in a safe investment.
Right.
You work so hard for the money that you make. Is just as important to know where you're placing the money and spending the money, essentially,
I agree.
as it is to make it.
Yes.
So it's important for any buyer to sit down with their lender, make sure the lender is clear about the client's goals and long term and short,
Right.
and tailors that loan to meet those needs, because everyone's needs are going to be different.
Totally.
So
You're right.
we're
agree.
happy to help anyone.
Please
that,
provide your contact information for those with questions and they want to work with you.
Yes, of course. You can reach me on my cell phone number, 713-387-9521. Again, 713-387-9521. And we are located in the Galleria area, so we love to meet our clients in person. We always set consultations, and we always try to meet clients early on, just so that we can write up a plan of action.
Right.
I don't think it's ever too early to begin that process, because you might believe that you are ready, and you might be ready, but if we look at your financial picture, we might be able to work on certain areas that need to be strengthened
Right.
for the next 6 months or 3 months or 4 months. And I think that's always valuable to set yourself up for having multiple options instead of limiting yourself
Right.
to only one option that may not be the most cost
Correct.
effective.
And avoid surprises in the middle of the process, right? Definitely. I agree. Thank you so much, Patti.
Yes, thank you for having
again,
me.
Thank you, everybody, for watching the Houston Real Estate Talk with Patti Contrasto today. And have a great day. Thank you so much.